Cool. Well, it is noon. Can everyone hear and see me?
We can.
Awesome. Well, so glad you guys are here with us today. My name is Courtney Graham. I am the Chief Marketing Officer at Princeton Mortgage, and we're so excited for you to join us today for this interview called Refi Proof Your Income, as we talk about some of the strategies that we found to help loan originators in this kind of uncertain market that we're in. I'm really excited to introduce to you today Mark Gordon. He is the Chief Revenue Officer at Princeton Mortgage, and he is going to be sharing with us, leading this webinar. Mark, I have had the pleasure of working with him for the past 3 years. I've gotten to know him really well, and he is really good at what he does. He has been leading and training top loan originators for the past 15 years. And I'm excited for you guys to meet him today and for him to share just a little bit about what he thinks are some good strategies and philosophies for sales professionals, for loan originators in this market that we're in. So I'll go ahead and hand it over to Mark.
Awesome, guys. Hey, listen, if anybody, listen, I know it's uncomfortable, but I would love it if you guys could turn your cameras on if you're available to do it so we can interact. We're going to have a question and answer portion at the end. It'd always be helpful for me to see you guys, and I can also see, judging by your faces, if I'm doing a horrible job or just an average job. So we'll kind of get a feel for that. If you can, I understand, but thanks, guys. So we're going to do a webinar today. Really, the purpose of this webinar is the market is obviously changing, and we want to be prepared to take advantage of the market that's ahead, and we're headed into a hard purchase market. I'm going to go over some of the strategies that I've shared with loan officers, both here at Princeton and my prior positions, to help take advantage of the market changes. And so, as you can see here, refi proofing your income is the topic, and basically, we're going to start with high level of the market, kind of what's going on in the market, and just the numbers behind that, and then we'll really start to focus on some of the behavioral changes. A lot of what we're going to talk about is a little bit theoretical, and then at the end, I'm going to boil it down to 2 or 3 points. If you guys have ever been to some of these trainings before, you probably have gone through them and maybe not changed a lot of behavior. I would love for you guys to take away 2 or 3 things from today that you'll actually be able to implement that will lead to more business, and so that's really the main goal. So as you guys can see, this only has the last month of 2017 in it, but if you look at 2018, 2019, and 2020 for total market originations, right, you can see that 18 was a rough year for the mortgage industry. 19 was sort of an average year, a little better than average towards the end. And then 2020 obviously was an amazing year. The refi boom came in huge, and mortgage companies more than doubled overall mortgage production from 2018 to 2020. The MBA estimates that 50% of the refi market, which was more than half of this market here, is going to go away here in 2021. And we're already 1 quarter in, and that quarter was going to be the one with the most refis. So as rates have gone up and continued, we're going to see a much reduced share of refinances as we go forward. So originators who depended on refi volume, and by the way, we interview loan officers every single day from multiple companies, and some of them were as much as 90% refi last year. They're going to have to find a really solid way to supplement that business as they get into this harder market, right? Last year, it was like, hey, I was in a fantasy football league. There were 10 people in it. 8 of them did a refinance with me. Woohoo, I'm having a huge year. We're obviously going to need some different strategies this year as we go forward with it. The good news, however, is the MBA projects that 7 million homes will get listed in 2021, and that'll be the biggest purchase market boom since 1983. Now, as you're probably experiencing in your local market right now, the inventory is tight. We have more buyers than sellers, but we do expect more sellers to enter the market. Like I said, 7 million this year, and that should really loosen things up a little bit. But so there's going to be a ton of opportunity in the purchase market over the next 9 months. We're going to talk about how best to take advantage of it. So in order to make anywhere near the same amount of income we made in 2020 as an industry, as loan officers, we're going to have to steal market share, right? And people don't like talking about that a lot, but in general, if you aren't taking a bigger portion of the purchase market in your area, you will have a reduction in income this year. And so this is going to teach you how to make sure that a bigger percentage of that purchase income. All right, Princeton selling system. So the mission is pretty clear for us, for our loan officers: increasing your income per hour worked, right? We're going to talk a lot about that because it goes into the goal setting portion of this, which is really important. increasing your customer satisfaction, and then improving the quality of your life, right? So whether maybe you made $200,000 last year and you only need to make 150 this year, and you just want to do it in the fewest amount of hours work so you can spend more time with your friends and family or doing what you like, or maybe your goal is to go from 200,000 to 300,000 this year, regardless of which, this system will work and help you. We have a couple of case studies here, by the way. Fred joined us in 2017. He did about 7 million. It was averaging about 10 million a year before coming to Princeton, career loan officer. Last year, mostly purchase, he was able to do almost 60 million. And Nicole, who re-entered production just in the end of, I guess, 2 years ago, this April, in her first time coming into this production, was able to average $2 million a month last year in purchase business by doing these simple strategies. So the 4 principles of Princeton selling are as follows. The first one is personal mastery. Personal mastery is very simply this. In order for people to want to work with you, in order for you to attract the top realtors to want to work with you, you need to be the best possible version of yourself, right? People want to work with people that are going to make them look good. And we're going to talk about that later. If your realtors or referral partners not attracted to working with you because there's somebody that they don't admire you in some way, or they don't want to be like you in some way, then they're probably not going to refer to you on a regular basis. So the more you can do work on yourself and becoming the best version of yourself, the more you're going to attract those top agents to want to work with you. Second, we want to set up our Princeton selling system, sets us up so that we never have to ask for the business. The most uncomfortable part of being in sales is asking for the business. We are going to attract people to want to work with us by creating value, and we can stop selling. The third is we're going to focus on the people that you already know to start with this strategy. And 4, we're going to connect and communicate with them. It's all about them and not about you, right? So I talk about the sales people all the time. It's like, hey, I'm uncomfortable asking for the business. I'm uncomfortable talking about myself in that way. Here, you don't have to focus on those individual things, right? You can focus on making it all about them and serving and creating value. So here's the bad news, right? None of the stuff I'm going to talk to you about is incredibly hard, right? Today, what we're going to talk about, but it is harder than doing nothing, right? And being a loan originator in general is a struggle, right? Every year is different, right? 2020 was a struggle because you had a ton of loans, but you couldn't get them closed. Your turn times blew up. Your processor quit. It was all craziness, right? So maybe you got COVID in the middle of it. Maybe you were sick. All tons of struggles, right? Figuring out how to do business remotely, right? 2021, new struggles. 2022, new struggles. That's how it's going to be. It's hard, right? Great LOs face the pain. They deal with the sleepless nights, the cold sweats, and the torture. If you ask a mediocre loan officer about their success, they'll point to their brilliant marketing strategy or something else. But the great loan officers have one consistent answer. They didn't quit. And so this is about implementing a strategy here, which is, okay, yes, there are changes this year and we have to adjust, but as long as we make those changes and we don't quit, we're going to take advantage of that market. So let's talk about personal mastery. It comes down to 3 things. First is your mindset. Second is your skill set. And third is your actions or habits, right? And we're really going to talk a lot about the habits today too, because that's how you're going to make meaningful change, right? We don't want this to be another one of those conversations you come to and then you don't change anything. So the Princeton selling system only works if you put it into action. Your discipline in putting your skills into action consistently will determine your results, right? So we have to start actually making these different changes. But if we're going to do that, we need to run our brains first. So what is your mental programming, right? This is one of those things that's really important. We talk about our mindset. So in other words, how do you get ready if you're going to meet a realtor you've never met before, or you're going to meet a borrower? Do you get that anxiety, that feeling in your stomach? What is your mental modeling and your mindset? Before you go in, you want to get yourself into a situation where you divorce yourself from the outcome of these individual conversations. What does that mean? It means you have a process that you can depend on. You're going to get yourself in the right frame of mind. You're going to look for opportunities to deliver value. If when you meet this referral partner, you go into this, let's say you're going to an open house, you're meeting a realtor for the first time, you meet them. If you're okay with the fact that this realtor may not need your help, but that you're just there to investigate that individual situation and find out if there's a way you can deliver value, a lot of that anxiety or the stress of that moment will go away, right? Because all of this in the system that we're going to talk about is about those individual collisions and owning those moments, taking advantage of those opportunities. So what is your mindset going in? Now, the good news is if you're in this training right now, you probably are already on your way to having a pretty positive mindset. You've already taken the first step. Why are you in this training today? Because you wanted to learn something and you wanted to get better. So that's really the first step. Congratulations to yourself, right? A lot of people won't take that step. They won't even, I'm one of those people, I would always say, I want to read that book and I wouldn't read the first page. Reading the book is half the battle, right? You got to learn the stuff. Second piece of it is you need to be able to set goals. One of the hardest things when we have new loan officers that come onto our team here, we have them sit down with our coaches, or I'll sit down with them to have their initial conversation. And we'll say, what do you want your life to look like? Well, it is very difficult to coach somebody who doesn't know the answer to that question, right? And so as you sit there and you think about, where are your goals? First of all, are you hedging on your goals because you're afraid to fail? Or are you hedging on your goals because you don't know exactly how you'll do that thing? When you're setting your goals for your mindset and what you want to do in 2021 and beyond, the first thing you need to do is say to yourself, okay, magic wand world, right? Forget about the how for a second. What do I want my life to look like, right? Is it that I want to be able to pay for my kids' college? Do I want a boat? Do I want that bigger house? Do I want to be able to save for retirement? Do I want to be able to work less hours so I can coach my kids' softball team? Whatever your thing is, you need to be able to have a vision for that first, and then we'll build out the program and have you take the steps to get there, right? Dream big. I've never met anybody who was wildly successful by accident. Figure out what you want, then figure out how to get it. The last piece of this is, when it's good, it's you, and when it's bad, it's you. So if we're here talking about 2020 and you're sitting there thinking, well, my 2020 wasn't that great. Good news, it's your fault. It's good news because then you can fix it, right? If it wasn't your fault, then there's nothing that you can do about it. So player versus victim. When it's good, it's you. When it's bad, it's you. If you're at a company right now and things aren't going that well for you, you can change companies. If your strategy with meeting realtors isn't working for you, you can change it, right? There are a million things that are within your control, but when it's good, it's you. When it's bad, it's you. So take ownership of it. If you're the problem, you can be part of the solution. So here's the key to the strategy, right? We're going to start getting into the good stuff here. When I ask loan officers, and I met with some really successful loan officers yesterday. One officer did 40 million last year, the other one did 50 million, another one that did 25 million just yesterday. I said to them, how many realtors that you don't know did you meet this week? How many did you meet for the first time, a first conversation with? All of them were like, none. What about the week before? Thought about it for a second, none. What about in the last month? They're like, one of them said maybe one, the other one was like, I don't really know, not a lot. You cannot grow your business if you aren't having meaningful collisions with people who can refer you business, right? So you're going to have to build meaningful relationships to get referrals from as many people as possible. And if you aren't meeting people, you can't do that first step. Now, when I ask those people, why aren't you meeting with those people? Why aren't you having those collisions? The answers are, well, I have to babysit my loans. My process is not good enough. I'm too busy. I got this going on. There's a million different things they tell us about, right? But the number one activity that loan officers get paid for is prospecting, building more loans, building a bigger, getting those loans and building a bigger business. And so the question becomes then, how can you scale your business? How can you grow your business if you aren't doing those prospecting activities? So people refer because they think it's going to make them look good. Everybody knows that guy. You know anybody who's like, everything you ask them, like, oh, I got a guy for that, right? Those people always referring somebody. They're doing that because they think it makes them look good to refer somebody else to solve somebody's problems. The number one reason people don't refer is for fear that you won't make them look good, right? So you have to be confident in your business model, confident in your strategy, and then go out and build those meaningful relationships. If they feel the loan originator might make them look bad, they won't refer the loan officer. They only refer salespeople with a consistent, likable personality who can deliver consistent results. Now, I can't do anything about your likability in this meeting. So if you're not likable, maybe you picked the wrong line of work, but I'm assuming most of you guys are fantastic. So if you're likable, the second step is putting the power into meeting those people and having those collisions. The second step is automated flow, right? So I'll ask a loan officer, I talk to these top loan officers or even loan officers that are struggling, and I'll say, okay, cool. What is your process for keeping in touch with the realtor that you met last week at the open house, or the realtor you met last week that was on the buy side of your transaction? They're like, well, if I remember, I call them, or I bump into them, whatever else it is. That's not a strategy, right? So the number one activity is go out and meet realtors, referral partners. Number two strategy is stay in front of those people. 70% of purchase borrowers find their lender through a referral from a realtor or their sphere of influence. 70%, right? So we keep hearing about technology and Zillow and Better Mortgage, but honestly, what we're hearing most from people is that they get their loans from their realtor or their sphere of influence. How do you become the LO of choice? Most originators believe that simply doing a great job by their customers and partners is enough. that those customers will come back to them on their next transaction. I'm sure you guys have all had the experience of you do a loan for somebody and then 2 years go by and you see they just bought a new house and you didn't even know about it on Facebook. And you're like, oh, they didn't go with me. I did such a great job last time. They gave me a huge referral. They said that I got a 5 out of 5 stars on my thing, right? Why aren't they going with me? Well, the answer is because you were being a secret loan officer. What I mean by that is you weren't in flow with them. You weren't out there in their world. You weren't connected with them. You weren't showing that you were a loan originator, right? So here's how we do this. You need to be in flow. What does that mean? Being visible, right? So flow builds relationships. Think about your best friends or your kids. The more you interact with them, the stronger the bond, the stronger the relationship. The same is true with your customers and partners. Now, flow has always been important in business, okay? But now in 2021, it's even more important. Here's why. How much more information are we getting on a daily or weekly basis today than we would have been 20 years ago? How many of you guys have a secret email address where you send all of your BS emails to that you never read or check? Right? Everybody has that, right? It's like, oh, I can't, or you just stop reading your emails altogether, right? You got a separate folder for this or that. You're just trying to get rid of them, right? So it's hard to get someone's attention. It's hard to stay front of mind. We're being constantly bombarded with so much information, 500 emails a week, all the different social media posts. You know, we're running from this place to that place. We're running to the kids' soccer game. You have to be, somebody in flow, you have to be able to grab people's attention. You have to be able to do it through multiple streams, right? So you're going to have your auto flow, which can be those emails you're talking about that maybe go into that, or you know, a piece of direct mail, maybe so it has the auto flow, but you're also going to need to have your live flow, which means you're going to have a meaningful conversation or some sort of interaction with people. Maybe it's interacting with them through their social media or in person, over the phone, with everybody that's in your database, right? And by the way, I hope everybody comes here knowing they have a database, right? I hope everybody here has a sphere of influence of people where you know what realtors you're targeting or trying to work with. And if you don't know how many realtors you should have in there, you should have a minimum of 40 realtors that you are in constant flow with, trying to get business from referrals. And you can rotate those 40 people out, but you need 40 people that you are focused on building meaningful relationships with on the referral side at all times. So in 2021, we recommend a minimum of 6 touches a month between email, text messaging, direct mail. And guys, direct mail is so underutilized now. I recommend strongly having at least one direct mail piece out to these 40 realtors every single month, if not more than 40, right? How much does it cost to send out 40 mailers? $80, right, for the month. Doing that every single month, $1,000 a year. That will stand out to your realtors. Why? Well, first of all, realtors do a lot of direct mail. They know it's expensive. They know it's hard to do, and they will admire you for doing it, right? That will attract them to want to work with you because they know that you're the dedicated salesperson that they can relate to. When I talk to realtors about their loan officers, like, oh, my loan officer's lazy, just sits around waiting for referrals. Well, now we can flip the script on them. We can say, no, I'm prospecting to you the same way you prospect to your sphere of influence. We're sending that direct mail, right? 6 touches a month, phone and social media, right? 50 forward conversations a week, and we'll talk about more about what that means. So your live flow, your magic of 50, right? 50 conversations a week. This is true across all industries. All top salespeople are having these 50 forward conversations every week, and we'll talk about that in a minute. So all of this, when you boil it down, we're going to get to the actionable part of this. Say, Mark, that's great, man. Have more conversations, send some emails and direct mail. I'm not going to do any of that stuff. Well, hopefully you'll do some of it. But we're going to boil it down into 9 daily and weekly habits that our originators follow here that has led to that doubling of their production within that first 8 months they come to Princeton Mortgage. This is the stuff. It's super simple. In fact, the total of these 9 things, if you do them every single week, is about 10 hours a week. It's called 10 hours of what we call the important but non-urgent activities that top originators do, right? So first thing is you're going to have your perfect week. We're going to take these 9 things and we're going to schedule them, right? And if you notice, by the way, what's the first thing we do every morning? We got to get our exercise in, get ready for the day, get dressed, and we're going to write out our gratitudes and affirmations plus 2 personal notes, right? By the way, does anybody think that note cards are dead? I kind of did, but then I saw the research on it. You know what generation of people is the most excited to get mail in a note card in the mail? Millennials, followed by Gen Z, right? It's actually the guys who are bombarded with all those emails and all that social media. When they get something in the mail with their name on it, they get excited like it's Sports Illustrated for kids, right? You all know when you were a kid and you were like, oh my God, it's Sports Illustrated month, right? Or my one day a month for Sports Illustrated for kids that you get mail. That's how the new generation reacts to these handwritten note cards. Sending those 2 personal notes every day. Start your day off in a mindset of where I'm going to reach out. You're not asking for anything, right? What do you write in your 2 handwritten note cards? Congratulations. I saw that your kid got into Duke. I saw that you just had a birthday. Happy birthday. Just thinking about you. Congratulations on this or that. Hey, we haven't connected in a while. We should connect for a phone call. Any type of direct mail that you can send to them that lets them know you're thinking about them is how you're going to stay top of mind, right? Just sending out 2 note cards every single day. If you do just on the weekdays, means that over the course of a year, you're sending out about 500 note cards to people. When I talk to top originators, so when I first took over at Princeton, I interviewed 50 of the top 500 originators in the country. They had about nothing in common. But the most common thing I heard from all of them was that they send handwritten note cards and they firmly believe in it. So if you aren't doing this practice, this is like thing number 1 you can do and change is when you wake up before you start your day every day, think of 2 people you want to write a handwritten note card to, tell them you're thinking about them, do it on your company stationery and send it out. An amazing way to have flow, right? Hopefully you have some learning in here, and you'll see this in here. And then you want to have social media time that you schedule out, time to go meet with realtors at their real estate offices, have lunch with realtors, go to open houses. All of this should be built out in your calendar, right? Why do people avoid building this stuff out in their calendar? Because they're afraid of the accountability it creates. Well, Mark, what happens if a borrower calls me and needs something? Cool, drag and drop it in your calendar and move it over here, right? You have to know what you're saying no to when you say yes to something. Without your calendar, you can just say yes to everything. One of our sayings here is to-do lists are evil. To-do lists are evil. You know why? Because you can always add something to to-do list, and then you just write it again on the next day and write it again on the next day and write it. It's like when you say get your oil change has been on the top of your to-do list for 3 months, right? It's like all of a sudden now your engine stalls. Well, it was never the most urgent thing, right? We don't want to program by urgency. It also weighs on us when we have that thing on our to-do list. But if I just see in my calendar Saturday is open and I put in go get your oil changed, now I get to release all of that. I stop worrying about getting my oil changed. I know what's built out in there. And I know that by saying yes to something else on Saturday, I'd be saying no to getting my oil changed. I need to be able to value that the right way. And so your calendar allows you to be able to do that, right? So here are our non-daily habits. 1, start with gratitudes. What are you thankful for, right? I also like to say, do some affirmations, right? Everybody here know what an affirmation is? You guys know? So in other words, when you set those 5-year goals and those plans, start writing them every day like you know you've already accomplished them, right? What you focus on expands. Thinking those positive thoughts will allow for those positive outcomes. Number 2, commit to showing up and staying on your plan. Well, that seems pretty easy. So I'm working through 2 of the 9 things. Be thankful, show up. Pretty easy so far. Anybody want to bail? You can just run away. Number 3, market, social media, and thank you notes, 30 minutes, right? This sounds crazy, but one of the most important things that you guys can be doing is posting on social media, and it does not have to be mortgage related. People follow you on social media. I get insecure. I'm like, oh, no one cares about what I ate for lunch. Actually, they do. That's why they follow me, right? And by the way, Mark Zuckerberg, he's really good at this. If it turns out they actually don't care about what I eat for lunch, it'll stop showing them what I eat for lunch. You ever notice when you go on your Facebook feed, it's just suddenly it's all the stuff that you wanted to see? Well, the people that do care about what's going on in your life, they'll see it, and the people that don't won't. So don't worry about who's looking at your stuff. Just post every day, right? Maybe it's posting something else that inspires you. Maybe it's posting about your transaction that you went through this week. But just a subtle reminder once in a while that you're there and that this is what you do is what you need to be doing in your social media. Also, you want to engage on social media with realtors. The realtors that are posting on social media, they're just as insecure as you are. They're desperate for likes and comments and shares on their social media. You know how you can make those people like you a lot? You can like and comment and share on their social media, right? Engage with them, build a relationship. I have tons of realtors and loan officers that I've worked with after building relationships with them that started exclusively through liking and commenting on their posts on social media. This is a free thing that you can do to make people feel good and help you build a meaningful relationship. Write our personal two notes every day, right? This feels great too. Start your day, write those 2 personal note cards. It's been a game changer for me. Prospect and update your database. This is 2 hours a day, right? And usually only 3 or 4 days a week, but spend 2 hours a day on this. Who are the realtors that you want to work with that you've never worked with before? Start reaching out to them, right? Who are your warm list realtors that you have a relationship with but haven't sent you business yet, but you think might send you business soon? And who are your hot list? These are my referring realtors. We can't leave them out, right? We want those people to feel special, like we appreciate them. We're reaching out, right? So again, sphere of influence. Who do I want to build a relationship with? Who do I have a relationship with already but might not be doing business with me? Who am I doing business with? Or I think, by the way, if it's a potential customer, somebody who I think is moving soon, right? Your friend John just got a promotion at work and it was a good one. He's probably going to want a bigger house. So I'm going to keep that guy on my hot list, follow up with him. Stay organized with this list, right? Who are the people that might give you a loan in the next 30 to 60 days, right? Follow up with those people. This is where your 50 Ford conversations come in, right? What's a Ford conversation? A Ford conversation, Ford stands for family, occupation, recreation, or dreams, right? What you're doing is you're touching base with people in your network. It could be the people you went to high school with. It could be your friend from the gym, whatever it is, asking them, how are things going? How's work? How's your family? Do you have any trips planned coming up? Where are you trying to get to? These are the conversations that lead to meaningful relationships, and they take 3 to 5 minutes, right? 3 to 5 minutes with 50 people a week, right? If you go back right now and track how many Ford conversations you've had this week, you're probably falling woefully short. You can't be a secret agent, a secret loan officer, right? If people don't know you're out there and doing this and you're not connecting with them and finding out what's going on, you will not build relationships. Here's the best part of this. There's all sorts of clues about how we can help somebody, right? Because again, this is about service. What value can we provide? Well, if someone says to you, and by the way, hey, I'm moving soon. Cool, you need me to help you move a couch? Great, I'm in for that, right? I want to provide value any way that I can. I want to build a meaningful relationship, right? But maybe hey, how are things with the family? Isabel, my youngest daughter, is about to go away to college. Are you going to downsize your house? Are you going to need a new loan soon? Oh, are you going to need to refinance, take money out to pay for college, right? How can I help? How can I be of service? Building meaningful relationships in your community. You guys all know somebody in your community or sphere of influence who seems to know everybody, and by the way, knows you better than you know them. You ever have somebody come up to you and you're like, oh, you know the face, and they're like, hey, Mark, and I'm like, hey, like, how's Nicole? That's my wife's name. I'm like, she's good, and how's Sam? Is she getting bigger every day? And I'm like, what is going on here? This guy knows everything about me. That's the person that you want to be for these other people. You want to be engaged with them in a meaningful relationship where it feels to them like you really care about them and have that relationship, so that when they're going to make the financial decision around their mortgage or refer somebody to do their mortgage, they're like, man, I know Mark. He knows me. We're friends. I trust him to help me make those decisions, right? So have those Ford conversations, 50 a week. Have your cold, warm, and hot list. Keep track of this stuff. Have a database. Right? I know there are a lot of people going here like, man, I don't even have a database right now. You got to take that extra step to have the database. You have to know who your targets are. And by the way, it's okay, to take somebody off your cold list and put them on ice. Maybe there's a realtor you really want to work with, but when you get that person on the phone, you're like, that person's not for me. Let it go. There are enough people who are for you. Work with people that you want to work with. Don't waste time with people that don't fit you and how you do business. Number 6. You got to go to open houses. I talk to loan officers all the time, like, oh, I don't want to go to open houses. Everybody goes to open houses. Then I actually go to an open house. And I talk to the realtor. How many loan officers have come to your open houses in the last 6 months? They're like, 1. I'm like, oh, who was it? Is it some kid from Princeton Mortgage, right? There's not a lot of people going out there and doing it, right? People say they're going to do it, but they don't. Spending 2 hours, by the way, bring your wife, bring your kids, make it quality time. Go look at the houses you're actually interested in, and just go out there and take interest in what the real estate market in your area, in your community, and then try to build authentic relationships with those realtors that are there if it makes sense for you to do it. Most of our new loan officers that come on here, we've had a bunch of people start here in the last year that had no experience and made $100,000 in their first 12 months. Almost all of those relationships started at open houses. Why is an open house such a great place to meet a realtor? Well, those realtors are on their A game trying to build relationships with you when you walk in the door. So instead of you calling up and being like, hey, I'm a loan officer, send me some business, they're like, hey, you're looking at buying a house? And I'm actually like, no, I'm really just taking in the market right now and learning about the opportunity. I saw this house. I wanted to stop by. My name is Mark. Getting to build a meaningful relationship. They're trying to impress me. I'm trying to impress them. The mindset starts with a meaningful relationship. I have a quick 3 to 5 minute Ford conversation. I get back in my car, connect with them on LinkedIn, connect with them follow them on Instagram, connect with them on Facebook. Now we're connected. Next day, I send them a handwritten note card because my note cards were sending out every day, saying how great it was to meet them at the open house. Now my posts are showing up in their social media. I send them a piece of direct mail, or maybe I send them something, in the mail to remember me. Also, they're calling up and they'll be like, Mark, I didn't even realize you were in the mortgage industry. Like, yeah, like let's meet up for coffee and find out, let's see if we can help each other, right? But I was able to take this moment where I met a realtor. I want to have 5 collisions a week at open houses, right? Build that meaningful relationship, find some sort of a connection, right? Invest in them, do all the little things. They know how hard it is to send a handwritten note card. That's why it's so meaningful, right? They know it's hard to send that piece of direct mail, right? That's why it's so meaningful, right? I started that relationship there with 5 open houses every single week. If you do one thing as a loan officer this year and you want to expand your business, it is get out into the real estate action. It's happening at those open houses, right? That's where the buyers are. That's where the realtors are. You're going to be part of your community. That's how you're going to become the trusted advisor. And say, hey, listen, yeah, I'm a loan officer. I go to these open houses. I want to do market research. I want to be able to advise my clients. I want to know what's going on in the market. I want to know how fast the houses are selling, right? If you're in my market right now, the biggest problem with going to open houses is trying to find 5 because the houses go on the market on Friday and by Saturday they're sold, the open house is canceled. But it's an amazing way to go out there and build relationships with realtors. And they're in relationship building mode, right? They're open to building relationships when they're at those open houses. That's actually part of the gig, right? 7, real estate office visits. By the way, I do not just pop in to real estate offices when I do my 3 real estate office visits. I find a reason to go. That reason may just be like, oh, my favorite realtor, that's my cousin, or maybe my cousin's a realtor. They don't even send me any business, but I'm going to tell my cousin I'm going to stop by on Tuesday when they're there. I want to be able to stop by there to build a meaningful relationship. I want to get myself invited in or make it okay, right? I want to have a reason to go. Maybe you're dropping off a gift. Maybe you're going to a closing. Find reasons every week to get to those real estate office visits and bump into people and build meaningful relationships. How do I turn a 30-second conversation with a realtor into a meaningful relationship? All the things that we just talked about, right? Hey, 30 seconds. So nice to meet you. I'm Mark from Princeton Mortgage. Go on social media, Instagram, Facebook, LinkedIn. Maybe I'll go back to the last Instagram post and be like, oh, I love that restaurant, right? Build that relationship. Handwritten note card. I send the next day. They get it 3 days later. Some piece of direct mail is part of my auto flow. All of a sudden now we're in a relationship. This person didn't know me at all. Now they see me everywhere, right? That's what we want to build when we have these meaningful relationships. Collision, connection, card, and cookie. Send them something in the mail, right? That's what we do here at Princeton. Those are our 4 C's. Have the collision, connect with them on social media, handwritten note card, we send a cookie, right? That's what we do for our 4 C's. Have your own version of your 4 C's. All right. Number 8, community events. Get out into your community. Be everywhere. Be seen. Wear your mortgage company gear when you go out and do it, right? You can't be a secret agent. Be part of your community. Let people know that you take yourself seriously and that this is not a job for you, but a career that you're proud of and passionate about. And number 9 is those 50 Ford conversations, right? So I say, Mark, that's great. I'm going to do these 9 things. I'm going to set up my calendar. How do I know if I'm doing a good job, or how do I really build the habits around this, right? Because mindset is we know we want to be better, right? Skill sets, we want to get good at these conversations. We want to get good at the note cards, good at posting on social media. Those are our skill sets. The habits are, right, these 9 things. How do we do them? Every loan officer at Princeton Mortgage, all of them, even the really, really good ones who tell me when they first get here that I don't need any of this stuff, we get them to try the scorecard thing for 3 weeks, and then they never give it up. What your scorecard is a mirror. People hate the scorecard, and they keep doing it. Why do you hate the scorecard? Because the scorecard is an honest assessment of whether or not you're actually behaving in the way you want to behave. So when a loan officer comes to Princeton, we say, cool, what do you want to be in 5 years? Where do you want to go? Great, amazing, you have a goal. Then we break it down into quarterly goals, or we call key results, right? And we break it down into the scorecard, which is what you want to do each week. And then we get it onto the calendar in terms of what you want to do every day. At the end of every week, they turn in their scorecard. We do tons of free marketing for our loan officers here at Princeton. My only requirement is that they turn in a scorecard. If they get a 0 or 100, that's fine. Just have to turn it in. Why? Because all I need from my team here is to be honest with themselves about whether or not they were willing to do the important but non-urgent work that top loan originators do. Were you willing to spend the 10 hours a week and get away from your process and get away from your problem files and get away from all the excuses and say, for these 10 hours a week, every week, I'm going to put the hard work into building new relationships and prospecting. So we do these scorecards, right? And you'll see here, how many forward conversations did you have? This person's goal was 40. What percentage did they get? Did I write out my gratitudes 5 times for the week? Why do we have that on there? Pat on the back just for saying this is what I'm grateful for, right? We want to make it easy. These 10 hours a week are so important. Did we post every day on social media? Did we have interactions by liking and commenting on those things? Did we write our 2 note cards, right? 54 conversations, Zoom meetings or restaurant meetings with realtors. Did we send any small gifts or books, anything that we could do to create value with our realtor partners, right? We have our marketing requests, 4x4 requests. Did we find new partners we wanted to market to this week, right? And so we have our individual scorecard here. This is the secret sauce, right? If you just say to yourself between 4:30 and 5 o'clock every Friday, I'm going to be honest with myself about what I did or didn't do this week to help me achieve my goals, it will change your life. This is your plan. Did I do my plan? Right? It's not for anybody else. No one here gets in trouble for not doing their plan. It's about you, right? Are you willing to even be honest with yourself about whether or not you're willing to do this? One of 2 things happens. For most loan officers, there's a slow change towards increasing your scorecard every week and doing a better job with it to get better results. For some people, they come back to me and they say, Mark, I know I said I wanted to buy a boat in 5 years or have $1 million in the bank, but it turns out I'm actually just not willing to do this stuff every week that will get me there. The scorecard has provided clarity to me. It's actually more important that I do this or that, or spend time with my kids, or spend time with my wife, or go hiking, or have my hobbies. Awesome, no judgment. But what it does is it creates clarity. If you do the stuff on your scorecard every week, the sky is the limit. You can have anything you want. The question is, do you have the skill set and the will? Is it important enough for you to do that stuff even when it's so easy to do almost anything else? Now, none of those 9 things are difficult on their own, but it's even easier not to do them. So will you make the commitment to yourself that you'll do this stuff even when you don't want to do it? One of my favorite sayings or quotes, a story, I guess it would be, is, you hear NFL players talk about being in the NFL, and so Ray Lewis, and he's like, oh, I would play for free. They pay me for practice. Sundays are my pleasure. What they pay me for is the 50 or 60 hours a week I spend preparing for the game on Sunday, right? Everybody wants to sell loans. Everybody likes being at the closing and handing over their closing gifts. That's the stuff that we would all do for free. It feels so good. It's like, hey, we're winning. This is the practice. This is the time you spend in the gym. This is the watching the film in our Ray Lewis analogy. And that's actually what we get paid for. That's what top originators get paid for. They do this stuff, right? So the last slide I have here for you guys before I turn it over to you is what holds us back. It's fear. It's fear of setting goals and coming up short. It's fear of doing the scorecard and realizing we're not as committed as we thought. It's fear of saying we're going to do those different things and then facing the fact that we're not doing what we thought we were going to do, or not performing as well as we wanted. It's fear of rejection when we walk into the open house, that maybe the realtor will be busy or mean to me or is not going to like me. It's fear of asking for business and having somebody say no, which, by the way, this whole thing really sets it up so you never even have to ask for the business, just to be the trusted advisor. But fear is what holds us back. How we overcome fear is very simply just to start doing some of it. What you're going to find out after you go to 3 or 4 open houses is that it's not scary. It's fun. It's awesome. You build meaningful relationships. And if you send out 3 weeks of handwritten note cards, what you're going to find is people go bananas over them in a way that you never expected. And what you're going to find is that when you do the 54 conversations and you call up that person you haven't talked to in 2 years, they're not like, Mark, why are you calling me? They're like, Mark, it is so good to hear from you. I've been meaning to call you all year also, right? All of the fear will go away by just taking the courageous step to start. And here's the thought I'll leave you with before I turn it over to you. Every time you start doing this stuff, every time you take that first step and fight through the anxiety, you become a bit more courageous. And every time you find something else to do and don't do it, you become a bit more cowardly. And I say that in a playful way, right? It's hard to do this stuff. Otherwise, everybody would do it. Otherwise, we wouldn't even be having this meeting, or you wouldn't come to this training. But Put a scorecard together for yourself. List out what you think if you did these things every week, and it's only 10 hours a week of stuff, what that you would get to your goals. And then just measure at the end of every week, are you doing those things, right? It will teach you so much. That's the first step. So I appreciate you guys coming. Does anybody have any questions for me? I haven't seen a lot of faces and unmute. Lawrence, hello, sir. How are you?
How are you?
Good. I'm doing great. Thank you so much. Do you have a question for us?
Yeah, this great content. Love it. Is there a way for us to get a copy of the PowerPoint? Because I was feverishly writing my notes down, but to be honest with you, I was listening more than I was writing.
Absolutely. And we have some additional things, including a blank scorecard that we can send you as well if you want to start plugging in. So we'll send you that and some other tools that we think have been really handy for us and for our guys, 100%.
Appreciate it. Thank you.
Yeah. Any other questions from anybody about the content, what you can do to make these things easier, which things, anybody want to hear stories about any of the stuff we do? Any other value I can provide in any way?
Mark, I have a question.
Sure.
If you could only pick one thing from everything that you talked about to start doing, what would that be?
2 hours a week going to open houses. I mean, assuming you're at the point in your business where your number one problem is I don't have enough business, 100% that's the secret sauce. Finding a time to organically, and by the way, I don't lie. I'm not sure like, yeah, I'm trying to buy the house. I'm like, hey, I'm in the mortgage industry. I go to these things. I want to learn more about my local real estate market. You know, I bump into some awesome people, make some relationships. That's what I'm here for. I don't come in with business cards or anything else. I come in, usually bring my daughter or my wife, and we go in and we look at the house, right? Because that's what we're there to do, and try to get ideas about the house and see what's going on in the market, and we learn. That was a game changer for all the loan officers that came here, and it's such an immediate impact, right? And as long as you go in comfortable and you say, listen, whether I'm going to meet a realtor when I walk in there, whether it's somebody that I end up having a meaningful relationship with for the rest of my life or somebody I decide I don't like, I get to meet a realtor. If you do that every single week, let's say you do it 3 out of every 4 weeks, right? That's 38 Saturdays a year you're going out for 2 hours. If you go to 4 open houses even every single week, right? You're talking about 150 plus realtors you're going to meet this year. You don't have to be that likable to click with about 20 or 30% of those people. And here's what our research actually shows, right? Our good loan officers get almost 50% or more than 40% of the realtors they meet with to send them a deal within 90 days, right? And even the ones who really struggle here are still at 20%. So if you go meet 5 realtors in a weekend, you spend 3 hours doing it, you go 3 hours on houses, you do 5 realtors every single weekend, you will get one of those people to refer you business within 90 days. And on average, the referring realtors, we actually close and fund our first loan from a referral partner 80 days after the initial collision. So this does not take a long time to get going. What you're going to find is a lot of realtors today hate their current loan officer. They're not really a big fan of that person. They don't think really great things about them. They just had a bad experience or a bad file. They would love to work with somebody who has the hustle to come to open houses and meet people, and that is likable and charming in that moment, right? And so if I was going to say one thing to do is have those collisions. If you meet 150 realtors this year, you will have more business than you know what to do with, right? And then, by the way, it's not just the collision. You have to do the connection and the card, and then whatever follow-up strategy you have on your flow system. But it's collision and connection alone even. And if you actually go out and interact on social media after that, the loans will start flowing in.
How do you with the COVID market being what it is and the limitations that occurs with being able to see people and or go to the open houses, because these open houses have lines, I don't know, around the block to get in. How are you, what are you coaching your loan officers on how to attack that in today's world?
Well, so the first thing is, if there's some sort of a virtual presentation, I usually will just reach out to the realtor and tell them how much I enjoyed it and introduce myself that way. Any excuse to reach out to somebody, you know, and have those conversations. The other thing is, I mean, if there was a line at the open house, what an amazing opportunity. That's an opportunity for me to have collisions with a bunch of other people that are there looking at houses, right? So I'm gonna wear my Princeton mortgage gear, and I'm gonna go shake hands and kiss babies and make friends, or not shake hands, I guess, in COVID time, whatever it is. Maybe we'll do a coronavirus bow or something, and we'll build a relationship that way. But what I mean is, it's an opportunity to get out in the community and meet people. And yes, I think we're I haven't done this presentation over the last year because of some of the concerns with coronavirus. I'm hoping that we're headed towards the end of that. What we did in the meantime, honestly, was we just, every time we saw a listing go up, I had my guys reach out to the realtors and say, congratulations, and we love the house, good luck. Right.
Cool.
And it was just we didn't ask for business, just a reason to reach out and have a collision. And you know, we didn't have any negative reaction to that. Realtors were like, thank you so much. You know, it's about, and then, hey, do you mind if I connect with you on Facebook? I'd love to promote your stuff and stay in touch. Oh my God, that'd be amazing. Right. Because they want people who are going to like and share their stuff on social media. So it's a very free and easy thing you can do to support them, because they have just as much anxiety about posting as we do.
Thank you.
Absolutely. Any other questions I can answer for anybody else? I'd love to hear from some people. All right, everybody. Well, I appreciate you guys taking your time to come. If there are things that you think we can do better next time, or more importantly, if there are other topics that you would like to see us do presentations on, we like doing this stuff and we like having you guys here. So let us know what those things are, and we'll see if we can do even better next time. I appreciate it, guys. Thanks so much.
Thank you.
Thanks, everyone.